All right, so let's talk a little bit about the economy, your money, and how our freedom intersects with all of that. On the line, we have one of our residency experts, Ference Toth. He is with Your Personal Bank radio show that you can actually hear every Tuesday at 2 p.m. on Money 1055. Ference, thanks for being on the show today. First off, what is Your Personal Bank?
Well, thanks, Matt, for having me. Your Personal Bank is a financial concept, and it integrates financial tools from both the banking and the insurance industries. And the goal is to continue growth on your money even after you spend it. So you have more money. It's that simple.
So how does Your Personal Bank policies differ from like traditional insurance policies?
Okay. So, Matt, you know how most of the time when somebody's purchasing an insurance policy, they want to pay, what's the least amount of money you pay for the biggest death benefit, right?
Right.
I mean, that's typical. Yeah, exactly. Well, what we do with Your Personal Bank policies is completely the opposite. In other words, we want to maximize cash, dividends, growth, and minimize the death benefit. So we want to earn our money to grow. Dividends grow just like any other investment, right? And, yeah, the analogy I say is think of a teeter-totter. Put cash on one side, death benefit on the other. Again, most time you're maximizing death benefit, minimizing cash. We're doing the opposite. Flip it on its head. Maximize the cash and minimize the death benefit. Make sense?
Sure, absolutely. So what is the current dividend rate right now?
You can receive up to 6% dividends today. And by the way, that is on the low end because dividends are highly interest rate sensitive. And we all know what the Federal Reserve has done with interest rates over the past year, right?
Right.
It's gone through the roof. And so historically, the typical dividends are 7-8%. So again, we're getting 6% insured, guaranteed, tax-free now, and it's on the rise. So we're pretty excited.
And how do you access funds? How much is available?
Well, this is why a lot of people like this because it's highly liquid. Unlike most investments out there, you're looking at 50 to 90% liquid day one. Okay, so many of my real estate investors, for example, use this tool, and you can access funds through either a policy loan or a bank line of credit. We use bank lines of credit often, much like a home equity line you use for a property. The equity in the property is the collateral for the loan. Here, the cash in the policy is the collateral for the loan. It's so very accessible and highly liquid right out the gate.
Awesome. So again, we're talking with Ference Toth. He is the host of a brand new show called Your Personal Bank Show. You can hear it Tuesdays, 2 p.m. on Money 1055, or you can stream it at money1055.com. Ference, what is positive arbitrage? How do you even pronounce that?
Positive arbitrage, yes. So, Matt, it's a very fancy term for a very simple concept. And this is the takeaway. This is the power of Your Personal Bank, as I share with people all the time. If you're earning, let's say, 6% dividend, and let's say it costs you 4% to access the funds, Matt, what is your money doing?
What is it doing?
Well, it's still growing because you're still keeping the difference, right? So if you're earning a 6% dividend, for example, and you get charged, say, 4% from the bank line to access the money, let's say, well, guess what? The difference is what you keep. And here's the takeaway, Matt. This is on money you spent. So you're earning a couple percent on money you've spent, let's say, to pay bills, buy something, maybe invest in some other asset. And because you're earning interest on money that's out the door that you spent, you have more money available, right?
Sure.
That's positive arbitrage. It's that simple. You're making money on dollars that have been spent. You're still earning interest. And that's how the wealthy keep becoming wealthier, one of the key tools they use, by the way. And the middle class tend to not do the same thing.
With some of these banks closing down, there's a little bit of fear about if our money and our funds are safe, or are they guaranteed?
Absolutely.
Are our funds safe and guaranteed?
Here they are. They're insured, guaranteed, and tax-free, actually. So you have guarantees, much like with FDIC, guarantees up to $250,000 in a bank, for example, the depositors, even with these bank failures. This is not a traditional bank. You control the money, so it is insured, safe, and guaranteed. So, yes, your money's safe. And
how is Your Personal Bank typically used?
Well, the banks tell us the most common uses is for like real estate investors, home improvement, business expansion expenses, things like that. Also, is one of the largest educational funds for, college tuition, things like that. High income earners, when you say tax free, you've got their attention, right?
Absolutely. Again, we're talking with Ference Toth. He's with Your Personal Bank. His phone number, by the way, is 866-268-4422. Again, 866-268-4422. You can go to yourpersonalbank.com, yourpersonalbank.com. Why haven't we heard about this before?
Well, there's a number of reasons, but this is, again, a tool that's typically used by institutional investors. And Wall Street loosely defines that as someone with 10 million liquid and above. So that's not the average American. And, banks, wealthy families, folks like that use this on a regular basis and have been doing so for decades and decades. Most financial advisors don't deal in that world. I was fortunate that I've been on the board. I was the chairman of a board of a bank in formation. We're trying to start an FDIC-insured bank in Scottsdale, actually. And so I was introduced to that world and realized institutional investors invest differently than typical, what Wall Street defines as retail investors. So the advisors just aren't familiar with it in most cases.
You have a show every Tuesday at 2 p.m. on Money 1055. Are these the type of things you like to discuss on your show, or what kind of areas do you dive into?
Well, I dive into the personal bank concept, obviously, again, taking control of your money, learning how to earn positive arbitrage and dollars you spend, all that good stuff. But I also just share, anything from a macroeconomic standpoint, current events, anything that affects our money, our ability to keep it, pass it on to our heirs. And obviously, recently, there's been a lot of political things, so I give people fair warning. And I get a bit passionate at times because, I'm first generation. I served in the military. Those things are important to me. So freedom and economic freedom is freedom.
So tax day's coming up next week. Do you have any advice or recommendations for people that maybe not this year, but maybe for next year? What's your thoughts on tax day coming up?
Well, you're right. This year, it's tough to make changes because it's too late for last year, but you certainly can adjust things for going forward for this year and forward. And one of the biggest mistakes I see people make is often nearly all of their money is subject to taxes in the future, a lot of IRAs and 401ks. There are ways to mitigate or reduce your future tax liability. In other words, build a tax-free bucket of money. And especially if you think taxes might be going up in the future with our government debt that we have and all that stuff, creating a bucket of money that's tax-free will help mitigate that tax risk. And far too many people are they're not doing anything to mitigate that risk.
We have a lot of people that listen to the program that are business owners, especially here in California and Sacramento. It's not easy. I mean, the government does not make it easy to do business here. And you were talking about the taxation and just all the craziness. What's your thoughts about businesses just trying to, they don't want to necessarily leave California. It's tempting. It certainly is tempting. And droves of people are doing it every single week. But there are those that, they like California. They have family here. They would love to stay here and continue to help their business thrive. Do you have any thoughts on what they can do? What kind of strategies to keep afloat with their finances and being strategic and wise with how they run the finances of their business?
Great question, Matt. And the first thing is the vast majority of my clients are entrepreneurs, business owners. I am myself. I've owned a retail plant nursery. That's how I started in the entrepreneurial world. I've been a real estate investor. I've mentioned the bank, being on the bank board, and I own this financial agency. So, yes, I'm a financial guy, but my focus is from an entrepreneurial viewpoint. And to answer your question, yes, you have to make your money go further. I have a lot of California clients. I've spoke all over the country to investor groups. And you have to make your money go farther, especially in California with the higher taxes and your ability to grow money even after you float it through your business, for example. So let me, real fast, is you have cash flow coming into your business or your household, right? And you pay expenses on that. One of the questions I ask these business owners and individuals, are you earning any interest on that flow? And the answer invariably is no. And I said, think about it. Do you think the bank is earning interest on the flow? Because you deposit money into a bank, right? And then banks loan that out to earn interest on your money, right? That's how they operate. Well, what if you could learn how to make money much like banks do on the flow of your household or your business? And if you could pick up 1 or 2 or 3% every year on every dollar that comes into your business every year for the rest of your life, you by definition would have more money each year available to live on, expand your business, pay the taxes, whatever it may be. That's what I teach people.
That's good. And you also mentioned that you're an educator. You like to speak about financial literacy. There's a lot of concern over the youth and this next generation, how financially illiterate they are, just do not know how to manage money. It's not taught in school. What do you teach parents, and what do you teach youth, high schoolers, college folks that, just have no idea about investing and saving? What are some of the basic wisdom pieces of advice that you give to parents and youth when it comes to financial literacy?
Man, I love that question. I have 2 teenage daughters, and I formerly taught a college-certified financial literacy course, so I'm very familiar with this. And one of my number one key points I make to young people and all folks is I say, first of all, you need to understand one thing. The government has no money, period. They cannot spend it. They cannot use it. They can't do anything. They have no money. How do they get money? Through taxes.
Real quick input on that. Because the problem is, I know a lot of young people that are recent college graduates or still in college, and they received all of this relief funds in the past few years to the point where they didn't even feel like they needed to go to work because they were receiving all these checks on a regular basis for the government. So from their perspective, holy cow, the government has a ton of money to give out.
From their perspective, but they got to think through it a minute. The government has no money. Where did the money come from? 2 sources. A taxpayer contributed to the system, so it came from someone who paid taxes, or they printed it. And if they print more money, that equals more inflation. So whether you receive money from the government or not, you're going to pay more in cost of housing, food, clothing, everything for the rest, as inflation increases. So everybody pays. So yes, you might have got a check, but you're going to pay back that and more than some just on cost of inflation increases.
But back to your point, the government has no money.
Right. So don't rely on the government for everything. In other words, you're better off relying on yourself and your own ability and your own education. No one can take that away, or your own experience. That's Warren Buffett teaches the same thing. The most powerful thing you can invest in is yourself.
I'm curious how you got into financing, because you said you were in the military. What lessons did you take from there? What was the transition like from being in the infantry to being in finance?
My wife called me a Renaissance man. I grew up on a farm, joined the military. I was in the U.S. 3rd U.S. Infantry, Old Guard, served at the White House. Then I got money for college through doing that, of course. Got an agriculture degree. Went to work for the U.S. government. Found out really quickly it wasn't my cup of tea. So I have some firsthand experience with that. I saw the waste. I saw the attitude. I saw all that. And so I decided to start my own, or bought an existing business, a retail plant nursery in Phoenix, Arizona. Did real well for a while. Then I got injured in a car accident, and I couldn't do the physical labor. We had a landscaping business, retail plant nursery, all that. So then I stumbled upon financial, found out I had a knack for it. Who would have thunk? And it just grew and blossomed from there. I've been in the business about 23 years, doing the retirement planning, teaching, educating clients, building a business there. And about a decade ago, I was introduced to this personal bank concept, which frankly is a paradigm shift in thinking about money. I was fortunate enough to get introduced to some folks and the banks, and all realize how institutional investors think about and invest money versus how I said earlier, retail, the average person. And that's my motivation for speaking around the country to investor groups. And now, the last 4 years, my radio show, and recently gotten the opportunity to expand the radio show nationally. So that's the short story of it.
Well, we're excited. You've provided a wealth of information already. So coming up Tuesday, 2 p.m., tune into Money 105 on your FM dial to hear his new show called Your Personal Bank. You can also go to his website, yourpersonalbank.com. Or if you'd like to have a conversation and find out what they can do with your investment, with your finances, call 866-268-4422, 866-268-4422. But again, all the info is going to be at yourpersonalbank.com. Thanks, Ference. Anything else you want to add before we let you go?
I just warn people, I get passionate sometimes, but you're going to learn, you're going to hear stuff that you don't hear on the legacy media. I say to people, I'm going to tell you what you need to hear, not what you want to hear. And then you can make real decisions about your future and your financial future.
Fantastic. Thanks, Ference, for your time. We appreciate it. We can't wait to hear the show.